world of business is always unpredictable. When the dollar climbs, when oil prices dip, when precious metals rise and investments in Europe surge, when overseas markets plunge and Wall Street tumbles, when there's an unsteady business curve, there's always one reliable constant. Moneyline, for the balanced view on business news, weeknights on CNN International.
Most Americans believe war will break out in the Gulf, and it will happen within the next few days. That's according to a new CNN Gallup poll. 2/3 of those polled over the weekend believe war against Iraq is very likely. That's up from 46% taken in a similar poll conducted a week ago. 1/3 of those questioned believe shooting will start within hours after tonight's midnight deadline expires. Another 1/4 expect a U.S. allied strike in a few days. And about 1 out of every 5 respondents believes military action will come before the end of the month. Nearly half of the just over 1,000 Americans questioned feel the situation in the Gulf is not worth going to war over.
As war fears mount, many investors are seeking a safe place for their money. Terry Keenan has that story from New York.
Here you go.
This was the scene being played out Monday at brokerage and mutual fund offices around the country. With the deadline for Iraqi withdrawal hours away, investors are preparing their portfolios for war. At Fidelity, the nation's largest mutual fund company, officials say customer transactions were up sharply. And 80% of new money is going into the most liquid investments.
During times of uncertainty, many investors, of course, flee to quality. We've seen a real surge in interest in the government money market area, the short-term treasuries and CDs.
What some people are doing is using this as an opportunity perhaps to clean up the portfolio. You're seeing a tremendous amount of pressure on the losers.
Mutual funds are preparing to have cash on hand to meet a surge in redemption demand. In recent weeks, stock funds have been raising cash to a record 13% of assets. That's a 50% increase from levels before the 1987 stock market crash. But not everyone is keeping cash on the sidelines. Many, like this investor, say they're making all-out bets on the outcome of the crisis.
I bought some puts on individual stocks because I think the Dow will decline with the war.
With many of these option contracts set to expire Friday, the stage is set for a hectic and volatile week, no matter what the news from the Gulf. In anticipation, most brokerage firms say they're beefing up staff and extending hours to deal with customer orders. Wall Street has a lot riding on its readiness. During the 1987 crash, many small investors felt they couldn't get out at the best price, one factor that's kept them out of the market ever since. Terry Keenan, CNN Business News, New York.
U.S. financial markets have developed a plan to deal with any outbreak of war in the Gulf. All the major stock exchanges and some commodities exchanges have agreed to halt trading for half an hour if war breaks out during the trading day. The halt would give investors a chance to absorb war news and hopefully avoid a panic. If war begins overnight, the exchanges plan to open at their usual times.
Well, Deborah, if war breaks out, some analysts believe that stocks will move sharply lower, and that could cause some big problems for investors who bought stocks on margin or credit. Steve Young has the story.
The 1987 stock market crash triggered tens of thousands of margin calls. Investors who couldn't meet those calls by pouring additional cash into their rapidly shrinking margin accounts were sold out. Now, with war seemingly on the horizon, Wall Street is again thinking about the possibility of a volatile, rapidly sinking market and large-scale margin calls. In 1987, many customers complained they were sold out at low prices without a formal margin call. What-if discussions have been kept discreetly quiet. Big retail brokerages say they'll stick to existing margin call time limits. These range between 3 and 5 days before selling or blowing out, as brokers say, a customer's position. A source at Fidelity says in the event of war and a rapidly falling market, customers who usually get 3 days to meet a margin call could find that cut to 1. For the record, a Fidelity spokesperson says the usual time limit would apply. The credit manager of one of the country's bigger brokerages mainly serving institutional customers told CNN Business News it's been warning some big accounts of possible multi-million-dollar margin calls if things get ugly, especially corporate customers with oil futures contracts bought on margin. But all bets could be off. In the word of one brokerage's key credit official, margin decisions we normally make day by day could be compressed to hour by hour. Steve Young, CNN Business News, New York.